Bitcoin is a digital or virtual currency that uses cryptography for security and operates on a decentralized network of computers. It was introduced in a 2008 white paper by an unknown person or group of people using the pseudonym Satoshi Nakamoto. Bitcoin is often referred to as a cryptocurrency because it relies on cryptographic techniques to secure transactions, control the creation of new units, and verify the transfer of assets. Key features of Bitcoin include decentralization. Bitcoin operates on a decentralized network of computers, nodes, that collectively maintain the blockchain. This means there is no central authority, such as a government or financial institution, controlling the currency. Blockchain technology. Transactions made with Bitcoin are recorded on a public ledger called the blockchain. The blockchain is a chain of blocks, each containing a list of transactions. This technology ensures transparency and immutability of the transaction history. Limited supply. There is a maximum supply limit of 21 million Bitcoins. This scarcity is built into the system to control inflation and mimic the scarcity of precious metals like gold. Mining. Bitcoin transactions are verified and added to the blockchain through a process called mining. Mining involves solving complex mathematical problems, and miners are rewarded with newly created Bitcoins for their efforts. This process also secures the network. Anonymity. Bitcoin is a decentralized digital currency that was invented in 2008 by an unknown person or group of people using the pseudonym Satoshi Nakamoto. It was introduced as an open-source software in 2009. Bitcoin operates on a peer-to-peer network, and transactions take place directly between users without the need for an intermediary, such as a bank. Key features of Bitcoin include decentralization. Bitcoin operates on a decentralized network of computers, known as nodes, which collectively validate and record transactions on a public ledger called the blockchain. Blockchain. The blockchain is a distributed ledger that contains a record of all Bitcoin transactions. It is maintained by a network of nodes, and each block in the chain contains a list of transactions. The blockchain is secured using cryptographic techniques. Limited supply. There is a maximum supply of 21 million Bitcoins that can ever be mined. This scarcity is built into the protocol to mimic the scarcity of precious metals like gold. Mining. Bitcoin mining involves the process of validating transactions and adding them to the blockchain. Miners use powerful computers to solve complex mathematical problems, and in return, they are rewarded with new Bitcoins. This process also secures the network. Cryptography. Bitcoin transactions are secured using cryptographic techniques. Private and public keys are used to facilitate secure transactions, providing users with control over their funds. Anonymity. While transactions are recorded on the public blockchain, the identities of the individuals involved in the transactions are not directly tied to their Bitcoin addresses. This has led to a perception of pseudonymity or privacy, although it's important to note that Bitcoin transactions can be traced and analyzed to some extent. Bitcoin has gained popularity as a digital asset and a form of investment. People can buy and sell Bitcoins on various cryptocurrency exchanges. It's also used for peer-to-peer transactions and as a store of value. However, its price is known for its volatility, and its regulatory status varies across different countries. The story of Bitcoin begins with the publication of a white paper titled Bitcoin, a peer-to-peer electronic cash system, in October 2008. The paper was authored by an individual or group using the pseudonym Satoshi Nakamoto. The primary goal of the proposed system was to create a decentralized digital currency that would allow for peer-to-peer transactions without the need for a central authority. Here's a brief timeline of significant events in the early history of Bitcoin. White paper, October 2008. Satoshi Nakamoto published the Bitcoin white paper on a cryptography mailing list. The document outlined the key principles of a decentralized digital currency system based on a blockchain. Mining the Genesis block, January 2009. The first block of the Bitcoin blockchain, known as the Genesis block or Block 0, was mined by Nakamoto. The embedded message in the Coinbase transaction of this block included a reference to a headline from the Times newspaper, providing evidence that the block was mined after January 3, 2009. Mining and early transactions. 2009 Bitcoin mining began, and the first transactions took place. The early adopters and miners played a crucial role in testing the network and establishing the foundation for the Bitcoin ecosystem. Bitcoin Pizza Day, May 22, 2010. A programmer named Laszlo Hanyecz made history by completing the first real-world transaction with Bitcoin. He paid 10,000 Bitcoins for 2 pizzas, marking the first recorded value exchange using the cryptocurrency. Growing community and market. 2011 to 2012 Bitcoin gained traction among a growing community of developers, miners, and enthusiasts. Online exchanges began facilitating the trading of Bitcoin for fiat currencies, contributing to the establishment of its market value. Increased public awareness. 2013 to 2014 Bitcoin attracted mainstream attention as its price experienced significant volatility. Media coverage and public awareness increased, leading to debates about its potential as a digital currency and investment. MTGOX incident. 2014 MTGOX, one of the largest Bitcoin exchanges at the time, filed for bankruptcy following a series of security breaches and the loss of a significant amount of Bitcoin. This event highlighted the need for enhanced security measures in the cryptocurrency space. Blockchain forks. 2017 disagreements within the Bitcoin community regarding the scaling of the network led to the creation of Bitcoin Cash through a hard fork in August 2017. Institutional interest. 2017 to 2021 Bitcoin gained attention from institutional investors, and financial products like Bitcoin futures were introduced. The cryptocurrency's price experienced significant volatility, reaching an all-time high in late 2017. 2020 to 2021 bull run. Bitcoin's price surged in 2020 and early 2021, reaching new all-time highs. This period saw increased institutional adoption, with companies and investment funds expressing interest in Bitcoin as a store of value. Regulatory developments. Governments around the world grappled with how to regulate and integrate cryptocurrencies into existing financial systems, leading to varied approaches and regulations. The story of Bitcoin is ongoing, with its impact on finance, technology, and society continuing to evolve. It has sparked discussions about the future of money, decentralized finance, and the broader implications of blockchain technology. Keep in mind that developments may have occurred since my last knowledge update in January 2022. Buying Bitcoin involves a few steps, and you can acquire it through various platforms such as cryptocurrency exchanges, peer-to-peer platforms, or Bitcoin ATMs. Here's a general guide on how to buy Bitcoin. Choose a cryptocurrency exchange. Select a reputable cryptocurrency exchange where you can buy and sell Bitcoin. Some well-known exchanges include Coinbase, Binance, Kraken, and Gemini. Create an account on the chosen exchange by providing necessary information and completing the identity verification process. Deposit funds. Deposit funds into your exchange account. Most exchanges accept deposits in fiat currencies such as USD, Euro, or others. You can typically fund your account via bank transfer, credit/debit card, or other payment methods supported by the exchange. Buy Bitcoin. Once your account is funded, navigate to the trading section of the platform. Choose Bitcoin (BTC) as the cryptocurrency you want to buy. Enter the amount of Bitcoin you want to purchase or the amount of fiat currency you want to spend. Review and confirm. Review your order, including the amount and price of Bitcoin you are buying. Confirm the purchase and the exchange will execute the trade. Secure storage. After buying Bitcoin, consider transferring it to a secure cryptocurrency wallet. While some exchanges offer wallet services, it's generally recommended to use a hardware wallet, software wallet, or a secure mobile wallet for added security. Choose a wallet. Decide on the type of wallet you want to use. Wallets come in various forms, including hardware wallets such as Ledger or Trezor, software wallets like Electrum or Exodus, and mobile wallets such as Trust Wallet or Coinbase Wallet. Withdraw to wallet. Withdraw your Bitcoin from the exchange to your chosen wallet. This step adds an extra layer of security by giving you control over your private keys. Secure your private keys. If you use a non-custodial wallet, ensure that you securely store your private keys or recovery phrases. Losing access to your private keys can result in the loss of your Bitcoin. Stay informed. Stay informed about the cryptocurrency market, security best practices, and any regulatory developments that may affect your holdings. Remember that cryptocurrency investments carry risks and the market can be volatile. It's essential to conduct your research, only invest what you can afford to lose, and consider seeking advice from financial professionals if needed. Additionally, the process and features of exchanges may vary, so be sure to check the specific instructions provided by the platform you choose. It seems like you've mentioned Bitcoin crypto, but it's not entirely clear what specific information you're seeking. If you have a specific question or if there's a particular aspect of Bitcoin or cryptocurrencies you're interested in, please provide more details so I can offer more targeted information. Are you looking for information on how Bitcoin works, its technology, current market trends, regulatory developments, or something else? Feel free to clarify, and I'll do my best to assist you.